Welcome to the Daily Update, where I'll go over the action in the market for Thursday, October 19th, and then we'll see how things look for Friday, October 20th. We had another down day. It was really choppy, lacked a lot of conviction. You've got a real tug-of-war going on back and forth. It looked like maybe we were going to be able to regain the August 2022 high, but that ended up not happening. We fell down below that. Some comments came out from Chairperson Powell that the market didn't really like, and we ended up closing near the low for the day, and we're turning things back more negative. One thing to be aware of, in Friday's session, it will be options expiration day, so that can produce some kind of craziness that's like its own little day. Let's go back and talk about what happened. Right at the open, we had a pretty flat open, and prices chopped around between 4,300 and the daily pivot at 43.28. So we were looking a little bit better, and that 33.25 is the August 2022 high. So we were really close to that level. Then as the day went on, we chopped around between S1 at 42.91 and the daily pivot before falling to close down below S1. And that was pretty much the negativity coming out of a speech that Chairperson Powell was giving. We were down 0.85% on above average volume, and our technicals are switching more negative now. We're not showing any extreme positive or negative readings at the current time. This should be a little bit more of a positive seasonality, but we're just not seeing that really playing out right now. And a lot of this is also having to do with the geopolitical event of what's going on in Israel. Some comments. Chair Powell did come out, delivered a speech, and confirmed that the jump in long-term rates that we've been seeing, which almost hit 5%, they have helped to tighten financial conditions. And this means that maybe the Fed could kind of ease up a little bit going forward. But then later on, they asked him a question, and he indicated that there's really no economic evidence that the Fed is too tight, at least yet. So that's what really freaked out the market. Rising interest rates continue to put a lot of pressure on stocks. We have oil continuing to go back up at 88.38. The S&P did end up closing below 4,300. Small and mid caps were continuing to show weakness again. The micro caps are hitting another new 52-week low. And this scenario, this is kind of what played out in Chairperson Powell's speech, that the economy is stronger than expected. They may need to at least keep rates higher for longer. If we keep seeing stronger than expected economic reports, they may have to raise rates. We're watching the Chinese economy to see if that's going to show any improvement. Everything going on in Israel, keeping an eye on oil, and then we're coming into earnings season. The dollar was up and interest rates were also up, and those are also putting a headwind in stocks. We have two of our yield curves that have gone back to being normal, the 30 to the 5 and the 10 to the 5. The two big ones that we watch, the 10 to the 2-year and the 10 to the 3-month, those are still inverted. Sentiment, it finally updated. We dropped down to 28. We're in negative. We're not extreme negative yet, where we had been at 35. Our trend, we're still not trending. The ADX is trying to turn back up, but we're below 20, and neither of the charts have shown it crossing back above its moving average yet. Our bias is negative, and our momentum is now negative. So the economic reports that came out, we had weekly jobless claims, and this put some pressure on the market as well. We're just seeing a really strong employment situation right now, especially when it comes to weekly jobless claims. They came in at 198,000. They expected it to come in at 211,000. Last week it was at 211,000. The continuing claims did jump up a bit to 1.734 million, where last time it was 1.705 million. The Philadelphia Fed Index, also not really a good report that came out here. It came in at -9. They expected it to come in at -6.5. But it was better than the -13.5 that was out last time. Existing home sales were up a little more than expected at 3.96 million. They expected just 3.9 million, and that's down from the 4.04 million we saw last time. Leading indicators, this was weaker than expected and a cause for some concern. We came in down 0.7%. They expected it to be down 0.4%. Last time it was down 0.5%. Here are the weekly jobless claims. This is still showing a lot of strength. We're continuing to fall, and the weekly moving average, or the 4-week moving average that we look at, is also continuing to fall, suggesting that the labor market is still strong. We are starting to see a bit of a tick up in continuing employment claims, though. These are people that go kind of for an extended period of time of being unemployed, and that's a little bit of a concern and a bit of a contradiction with what we're seeing in the initial claims. So when we take all of this together, the initial claims are the red line, and they're pretty much topping out and actually coming down a bit. The continuing claims are starting to go back up, where the last unemployment rate we had was at 3.8%. Here is the Philadelphia Fed Manufacturing Index, where it did show some improvement over the previous month, but it still came in at -9. Then looking at the leading and coincident economic indicators, this is for the LEI, where it's the red line that we tend to follow, and that's a little bit more spastic with how it moves around, and that is declining. To see how things are looking right now, we follow the blue line, and that is continuing to go up, so that's showing a little bit of strength. We're almost at that 5% with the 10-year yield, which is pressuring stocks. Here's the intraday chart, where we did have a little bit of a higher open. It was pretty much flat. We just chopped sideways. We ended up going negative. We tried to find some support at 4,300, a round number. We bounced back up. It looked like we were going to regain the August 2022 high. We fell back, came down to S1, came back up, tried to set a new high. That didn't happen. And then this is when things started to turn more negative. We dropped down below S1. We never made it down to S2, but we did close pretty much at the low for the day. Looking at large cap growth versus value, we're starting to see them both really show some weakness right now, where the blue line is actually starting to go underneath the red line. That means the growth is underperforming. This is also a concern. For the last few days, we've been seeing where the growth to value ratio for the S&P is starting to show some weakness, and that's not positive. On an end of day basis, though, we're still looking okay. We do see where S&P growth is outperforming value, and this is continuing to break out. Here's our trend, where the ADX is trying to turn up. It's below 20, so that means that we're not in a trend, but it's not strengthening yet because we haven't crossed above the moving average. The red line continues to go up as the green line is going down. So again, we default to negative. We're seeing that same thing. We are turning up and not quite across the moving average yet with our short-term ADX chart. The red line's going up, the green line's coming down. Not a trending environment, but again, we would default to negative. Keeping an eye on the VIX. It seems like we're kind of doing the opposite of what this chart has been telling us, where we typically will top out in about the middle part of October and then start to decline, and that can often give support to stocks. We're not really seeing that right now. The Ulcer Index is turning back up a little bit after fear had been decreasing, and we're starting to shoot above 20 with the VIX on the line chart as well as the bar chart, and we close pretty much at the high for the day. That shows that fear is increasing. Volatility of the VIX is also showing a real big increase, and we're still going higher with our VIX to VVIX ratio. That's longer term negative. The equity put call ratio, though, is still going down. Now, it's not really going down with a vengeance right now, and pretty soon this rise in the equity put call ratio that we've been seeing will get calculated into the 5-period moving average, but it's not quite there yet. So in the meantime, this is more positive, but we need to see more follow through with price. The longer term equity put call ratio continues to go back up. That's negative. We're also seeing an increase of fear with this fear gauge. We did get the latest reading from American Association of Individual Investors. Not a lot of change. They're just pretty much at the midpoint right now. We're seeing the red line showing some improvement, but if we stay negative for an extended period of time, this red line will likely turn down. Looking at the ratio between risk on and risk off, we are showing weakness here. That's negative. The mass index, we're wondering if a new signal is going to be generated very soon. We've now crossed above the red dash line. We're waiting to see if we cross above the blue line. The advanced decline line, based on price, we're coming down to the moving average again. That's showing some weakness. And we never did get back up to the moving average based on volume, and also showing weakness. We're seeing an expansion of the new lows, but it's not really being taken account so far in our 5-period or 10-period moving average, but we're seeing the new highs really drop off as the new lows expand. The advanced decline ratio starting to turn a bit more negative. The blue line is below zero, as is the red line. Accumulation distribution. This had been giving us some hope for a while, but now we're starting to see this drop below the red line. The Chaikin money flow is still holding up fairly well. It's positive and hasn't really started to decline, at least yet. We're still down below this longer-term trend line. We came right up to the 50-day moving average. That's acting as overhead resistance, and we've been bouncing down since that time. Down on the bottom, you can see where volume is above average. And so we're picking up a little bit with an average sense when we look at the volume each day. The force index is showing things more negative. It's dropping further below zero, and it's not extreme. We're turning more negative in the short-term stochastics, turning down with the intermediate term, rolling over and starting to cross negative with the long short-term stochastics. We're dropping further below the 20-period double and triple exponential moving averages. The longer we stay below this, the more this green and blue line are going to start to decline after it had been looking more positive. We're well below the 20-period moving averages for the simple moving average as well as the exponential moving average. And we're seeing some more weakness with the cumulative NYSE advanced decline line. That's starting to break down to new lows, at least based on this chart. We are coming back down to this previous level with the regular NYSE advanced decline line. We're not quite there yet. This is also turning more negative. The Swenlin trading oscillator based on price is starting to drop below zero as well as volume, and it's already dropped further below zero. The go, no-go system is still a deeper purple, so that's negative. The TTM squeeze, it's still positive, but it's starting to flatten out just a little bit. The balance of power, still positive, but it's ticked up just a little bit, but any more follow-through, and we could see some weakness here. We're coming further down from the midpoint with our highest high and lowest low values. That's turning things more negative as the red line and blue line continue to flatten out. The vortex right back down to where we were not so long ago with the green line and the red line pretty much on top of each other. We had turned more positive across with the red going above. That could turn things more negative. The ease of movement also was hanging in there for a while, but now it's starting to show some weakness. It's still above zero, but it could easily drop below zero if we have another down day. This was also something positive. We were seeing good action out of the bullish percent index for the S&P. Now it's starting to turn and go back down. And we're also dropping below zero with the S&P 500 McClellan oscillator. That's turning things more negative. Our summation index based on price and volume are starting to roll over and turn down slightly. The NYSE McClellan oscillator, it was negative after yesterday. Well, it's even further negative after this session. And so we're starting to roll over with the summation index for the NYSE based on price and volume. We're still negative with the Elders Impulse system for the S&P. We're dropping further below 50 with the RSI based on 14 and 9 periods. On balance volume continues to look more negative. And I didn't show this chart yesterday. They had some erroneous data, but we're seeing some weakness with our 200 moving average study of stocks inside the S&P. That's continuing to fall, but not really breaking down, at least yet. Also seeing some weakness with our 50-period moving average study. We're dropping below this 100% retracement level now. And if we continue to fall, I'll probably extend this line over where we're going to come down and see if we'll be able to at least try to fall at where we saw previous support. We're also dropping down below the 61.8% retracement level. Are we going to keep going down to these previous lows or actually come down to the 50%? I brought this back up. Haven't looked at this in a while. If we continue to fall, are we going to come down to these two fib levels that are right on top of each other? The copy curve, though, is still generating a buy signal, even though it's rolling over. The Pring bottom fisher is also generating a buy signal. And we're not showing anything extreme with our PMO study. The PMOs that are rising are going down. We're declining with the buy signals, rolling over negative with the percent of PMOs above zero. And we're starting to show some weakness with our momentum, rolling over a bit with the PMO, also rolling over a bit with price and volume. This is also more negative. The NYSE bullish percent index is back to declining and below 50. That's negative. And this is also negative. The NASDAQ 100 bullish percent index is now crossed back below 50. That's turned negative. Our slope oscillator rolling over a bit, but is still positive. The MACD also rolling over, but still positive. So we're seeing some weakness here with our oscillators, but they haven't switched over negative yet. We're still well below the 50-period simple and exponential moving average, and the longer we stay below this, the more the red and the blue lines will decline. We're coming down to the red area, which is a triple exponential moving average, and we're starting to break below that with our 50-period moving average study. And our moving average tree, notice how we're coming back down to the 200-day exponential moving average. It's the simple moving average that the market really pays attention to. Is this going to turn into some kind of scenario where, okay, we dealt with the exponential moving average, but the market didn't really pay attention to that? Are we going to end up declining all the way down to the simple moving average this time and test that level? Just a thought at this point. We're dropping further below the midpoint with our standard deviations chart, and we're starting to go into the -2 standard deviation. Also turning more negative with the Chaikin oscillator, dropping below 50 with the money flow index. The ultimate oscillator is turning more negative. And here's a big one. We have a dot on top with the parabolic SAR. That has switched from being positive back over to negative. We're still kind of right underneath this mini rainbow with our 20-period simple moving average of the open, high, low, close. The fact that we closed a little bit down below that and all of our rainbow is declining is more negative. And we're below this longer-term trend line. If we continue to fall, will this other green trend line actually try to provide some support? Special K is still right on top of the red line. So it hasn't, and this is a long-term oscillator, so it can take some time for this to actually roll over and give a new signal. We are seeing some weakness with the Dow. The transports are actually going down more. We saw some weakness with the utilities. The Zohorchak method, after giving us a really positive buy signal, it is showing some weakness now. There's a one-day lag on this chart, but with the weakness that we've been seeing right now, this is a bit of a concern. The S&P to utilities ratio had been going up nicely, but now is starting to come back down. And the Staples to S&P 500 ratio had been declining, which gives support to the S&P. Now it's starting to go back up. Our 10-day average of the S&P 500 highs minus the lows, we're still just a little bit below 50 right here after giving us an extreme negative reading. This is a slower indicator, so if things are turning more negative, it's going to take a little bit longer for it to get picked up with this chart. We're starting to drop below zero based on price with our 19-day exponential moving average of the advanced decline ratio. We're also dropping below zero based on volume. We're setting another new 52-week low with the microcaps. The Heiken Ashi is turning more negative. The Kegi is turning more negative. Renko, this is kind of strange. We actually are looking a little more positive, and the three-line break is actually looking positive. So we're seeing a bit of a mixture with our different chart variants. The equal weight is continuing to underperform the S&P 500 and showing some pretty broad-based weakness currently. But when you look at the ratio between the big stocks and the smaller stocks, they're still holding up with the bigger stocks so far. If we start to see some weakness in the big mega caps, that could really put some pressure on the market. The Dow is still falling further below its 200-day moving average. The diamonds remain at negative. The NASDAQ 100, after holding up its support at this pivot level, we've now dropped below that level. That's turning this chart more negative. And the elder impulse system for the Qs remains negative. We're starting to lose our positive momentum with the NASDAQ 100. We haven't quite crossed over negative yet, but we are showing some weakness. And the NASDAQ also dropping below support underneath the 50-period moving average. And maybe we'll come back down to try to test these previous lows. We're coming down to the 50% retracement level for the NASDAQ. We bounced above and below it for quite a while here. But is that what's going to happen, or are we going to end up falling through this level? The small caps are still more in a downtrend right now after our recent death cross, and we're coming back down and testing this previous level of support. The Russell is also seeing a death cross. We're negative with the RSI, starting to roll over with the MACD, where the small caps remain negative for the Elder's Impulse system. Also, a death cross with the mid caps. coming right down to this S1 level. This support level so far has held. Are we going to fall down below that? And the mid caps remain negative for the Elders Impulse system. The FANG index is still below its 50-day moving average. Longer term, it's still in an uptrend, but the fact that we lost this moving average is a bit more negative. And we're coming right back down to the arithmetic scale trend line going back to 2009. We had been able to get above it. Now we're starting to come right back down to that line. We're seeing some weakness here. The Qs to the S&P are showing some weakness. Discretionary never really did kick into gear, and it's really underperforming the S&P. Large cap growth is showing some weakness compared to large cap value. It's come right back down to its moving average. With our growth to value ratio, seeing some weakness with the large caps, mid caps, and small caps. This is, for right now, looking a little more positive, but now we've had 2 negative days with our indicator. But this is still below zero with our 50-period exponential moving average of the new highs minus the new lows. Here's the indicator, which is the black line. We're below zero. That's not going to help the red line to go up. The 50-period moving average study for the S&P after getting extreme negative was showing some improvement. Now we're starting to fall back down. And a broader market range, look at the 5-period moving average of the new highs minus the new lows. With the Amex, NASDAQ, and NYSE, we continue to be below zero. That's broader market negativity. The dollar continues to go up and is in an uptrend. The financial sector has now fallen back below its 200-day moving average. We spend a few days under here, we're probably going to see a death cross. We are starting in the new cycle. It began on October 17th, wondering, is this going to be the beginning of a downtrend? And interest rates continue to go up. We're just underneath that 5% level with the 10-year bond. So based on price, we are negative across the board when you look at the 7 to 10-year bond ETF. The 30 to the 5 is still remaining normal, and the 10 to the 5 has switched back to being slightly normal. Our other yield curves are still inverted. I showed this yesterday, but we're just seeing a continuation here where cash is now starting to outperform the 3 to 7-year bond ETF. This means there's a lot of uncertainty about interest rates. We're seeing kind of that same thing where shorter term bonds, 1 to 3 years, are outperforming the 3 to 7-year bonds. That's also showing a lot of indecisiveness with interest rates. I also showed this yesterday where the tips to 3 to 7-year bonds, the tips are underperforming. But when we go further out to 7 to 10 years, the tips are outperforming. That also means that there's inflation worries and worries about interest rates. We're still seeing a pretty strong correlation when we take the 10-year yield for the U.S. and subtract the German 10-year yield. That's continuing to go up. The dollar continues to go up, and the correlation continues to get stronger. That's probably right now more negative because we're seeing interest rates going up overall. That's the top part. And we're seeing the dollar going up. That's also putting pressure on stocks. Tom Bowley's research, we're still in the middle part where we should be seeing some good gains at this time, but we're just not seeing that for right now. After this, we will enter a weak time before we typically, on a historical basis, may see some positive times going into the end of the month. So what's our outlook for Friday? It will be options expiration. So that's kind of its own day. It's usually a pickup in volume. The UAW strike is still continuing. They still have not been able to pick a new Speaker of the House. I guess Jim Jordan is now dropping out. They're thinking of maybe going with the temporary Speaker that they've been having for a while, letting it sit for 3 months or so, which really doesn't help because there's a lot of geopolitical things going on right now. And without some actually voted in and leadership in the House that folks are more confident in, it's going to be really difficult to make some decisions if those need to be made. And then the whole Israel thing that's going on, are we starting to see that escalate? The technicals, we're turning more negative and showing some weakness, and we're also below support. We will get the Treasury budget, not a big influential report in Friday's session. The big geopolitical event is what's going on in Israel. Here's the last day for the economic calendar. I'll put up a new one when I do the video for Monday. The Stock Traders Almanac statistics. We are negative for the Dow. We're only up 33 1/3% of the time. We're neutral to negative with the S&P, and we're flat out negative with the NASDAQ. So historically, this day hasn't been very good. when we look at the whole week, this is the last trading day for options expiration, and we tend to be up 73.8% of the time for the week. We will be on the 15th trading day of the month. It is options expiration. Historically, we tend to see some weakness here, where we also see a little bit of weakness with the green dash line. That's the S&P during a pre-election year. And we keep watching this. Are we coming into this green part of the chart where we're seeing more of a decline? Also wondering that by looking at the Carson chart, the NASDAQ chart, and the S&P 500 chart. And we tend to be up a little more than down in the month of October, going back to 1950 during a pre-election year. Bitcoin seeing a little bit of a bounce these days. It's coming back up. We're trying to tease that 30,000 level again. We're into the 29,000 range. So our scenarios, not going with the up or down scenario right now because our ADX charts show that we're not trending. So we're leaning, if anything, towards that. If we would default to anything, it would be to the negative because the red line is on top for both charts. The warning signs, our longer-term equity put-call ratio continues to go up. That's negative. The risk-on posture continues to show weakness. The 50-day new high, new low exponential moving average study is negative. This is a new one for the list. The parabolic SAR is now switched negative. The Russell, the small caps, and the mid caps are all working off of death crosses now. Positive signs, we're still trying to figure out what the special K chart wants to do. For right now, the equity put call ratio based on 5 periods is continuing to decline. That's positive. Our oscillators are showing some weakness, but they're still positive for right now. The BPI also has been strong lately, but showing some weakness. The Copic curve and the Pring bottom fisher still have buy signals. Small and mid cap growth still continue to be positive. The financial sector has then dropped below its 200-day moving average. That could generate a death cross. So our conclusion, we're turning negative. We're not trending right now, and we're below support. In the short term, we're turning negative. Intermediate term, we're turning negative and also losing more support, but we're still positive in the long term. Thank you. I hope you found this helpful. Have a really good day, and I will talk to you in the next video.